in order to expand the potential of this. The key financial institution case studies from Asia are from mainland China, Hong Kong, Southeast Asia, Japan, and Cambodia, so quite a wide spread. And then we go outside Asia to Europe as well and take some lessons from there. But again, the purpose of this report is really to help Asia with its own nature financing needs. And then from these case studies, we've drawn a number of actionable items that organizations can take, which is aligning with global standards, enhancing risk monitoring and capacity building, piloting scalable solutions, and mainstreaming sustainable financing structures. And the speakers coming after me will speak more about these in detail. You can go to the next slide, please. So from these case studies, we've been able to sketch a pathway to biodiversity-informed financial decisions that can be taken by corporates or financial institutions. The first is to set a framework, and we recommend the TNFD's disclosure recommendation structure, which was for Hong Kong institutions. That's actually being integrated into ISSB as of about a month ago. And then because Hong Kong largely follows ISSB, it's all very integrated. Selecting biodiversity indicators, which depend on what jurisdiction you're operating in and the nature of the operations. So biodiversity indicators will be a little bit different depending on the context of your organization. Monitoring, collecting data, and reporting. Data collection, especially of high integrity data, is a known challenge in this arena. And so we do have a section of the report addressing how these things can be done in a very practicable way, and what metrics and indicators can be used in order to make sure that they're both aligned with the operations of the organization and grounded in scientific rigor. And then enhancing and refining. We want this to be seen as an ongoing process. This is not a do it once, report it, and you're done. This should be both for internal purposes to improve the operations of organizations and then as well for reporting purposes. But even the goal is to take smaller steps from some baseline. So find your baseline, start with doing something. And then as this gets into the workflow, as results become apparent, then this can be continually refined up to and beyond 2030. And if you can go to the next slide. And we just wanted to thank all of our collaborative authors. Many of them are also on this call and will be speaking about their areas of expertise. But we've had a huge number of contributors to this. And thank you very much to everyone who's been involved. And we hope this is a useful and practicable outcome. Thank you.
Great. Thank you so much, Audrey, for sharing very much the highlights of the report. And to our participants, please do download this report after this webinar. It's also available on the HKGFA website. And I think to preface cover the next presentation, in the latest TNFD status report, 63% of respondents have ranked nature-related risks and opportunity as a critical component to future financial prosperity, and noting that specifically the rapidly evolving policy and regulatory environment was one of the key drivers for taking action. So our next presenter, and we'd like to welcome Vivian Tu, who's the founding principal of Vivian Tu Law Practice, to share with us the current relevant global nature-related policies and frameworks and assessments that can be utilized to support business decision-making. So with that, I'll pass the floor to Vivian. Thank you.
Thank you, Jenny. And let me put my slide across, and I hope you can see that. So it's been a privilege to be part of the working group on the report. And I'd just like to spend some time to put things in context, especially with respect to legal policy and regulatory drivers for nature on the topic of nature finance. Just very quick introductions. I've launched an impact law practice focusing on integrating sustainability impact into the mainstream market and transactions. So it is actually about how sustainable finance and impact it's becoming integral in capital markets and business activities. And in that context, I do want to highlight that It is often the journey for organizations and how you may initially consider this as a matter of compliance or baseline. And certainly that is driving a lot of initiatives around sustainability. In particular, a lot of organizations' attention right now has been on climate following the introduction of the reporting standards in Hong Kong as well that incorporates climate risk and opportunities disclosure under the ISSB, in particular as to climate standards. But it is a spectrum in terms of considering risk from risk to opportunity and thinking about how it aligns with an organization's values, purpose, and strategy, and then taking steps to drive actions that perhaps avoid risk and harm and drive positive change. And so it is a spectrum as illustrated on this slide here. And what is actually increasingly the approach in the market is where you have a holistic approach that has to cover all the related and cross-cutting issues and take into account policy drivers, the regulatory requirements, as well as legal considerations and financial metrics and drivers in structuring. And so that's where we see this increasingly in sustainable finance and impact investing playbook, as I call it. So you would have to consider, as you're designing your sustainable finance and impact framework, what are the relevant sustainability issues? And this is where I think the report highlights nature aspects that we need to consider. And the key point is it is about nature dependencies, where nature is not only a business resource for businesses, but is also a question of where businesses need to avoid and stop the negative harm and impact, stop nature degradation, and address nature risks, especially because of the climate change impact on nature. And in the context of this, there is an urgent need to recognize where this is driving policy regulations. So as I'm showing on this slide, the first question is, what are the relevant regulatory and compliance areas? What are the questions around taxonomy alignment? And what are the sustainability impact goals that might be relevant? And this actually could be applicable for any business, any impact investor, any funders. And increasingly, we are then structuring sustainable finance impact structure around that, and also thinking about sustainable finance or impact governance. And we're looking to have more frameworks and models to scale, such as the sustainable bonds principles or the loan principles, or as we increasingly have market adoption of TCFD and TNFD, as we heard earlier. These are all driving a new approach in the market. And I think this is something we'll need to all recognize. But the global sustainability drivers and headwinds have been around for some time. So this isn't new. I think it's really been a shift increasingly from soft law principles to hard law requirements, and with disclosure regulations and also more taxonomy requirements. This is definitely high on business agenda. So even though there are some headwinds, the sense is that businesses are taking it seriously. And definitely, financial institutions have a key role to play in terms of how financial institutions translate policy and regulatory frameworks that is affecting businesses and capital markets, and transitioning to an environment where business decision-making, financial decision-making, and financial instruments, you will integrate sustainability. And in particular here, we talk about nature considerations into your framework, into your transaction, into your financial instruments. And so as highlighted here, key report recommendations is to align with global standards, enhance risk monitoring and capacity building to understand nature risks and opportunities, and pilot scalable solutions so that we can mainstream sustainable finance structures. So it is a mix of, as I mentioned earlier, policy, legal, and regulatory drivers. So I would just highlight a couple of areas in terms of illustrating. So in the investment market, certainly we will increasingly see an emphasis on sustainability risks as a primary consideration as part of fiduciary duty, and that on the other hand, on the new pathways that the Principle for Responsible Investment has introduced, having specific clarity around sustainability risks and opportunities incorporated into investment decision and stewardship, and finally, where you have specific intentionality for impact investing. So this is actually relevant for financial institutions, asset managers in terms of offering of sustainable investment products. And so the overall trend is that we are bringing together and seeing the bringing together of the interdependencies of climate change and nature risk, as Jenny mentioned at the start of the call, which is kind of came out of COP30, which is mentioned and referred to as Nature COP. But actually, since COP28, there has been this effort globally to drive alignment of national climate and biodiversity plans. So I think the report is timely to really highlight how we can do that, and the role of sustainable finance to not only manage risk, sustainability risk, but also drive long-term value creation. And I would actually just mention again that under TNFD framework, where we think about risk and opportunity is actually intended to be holistic. When you also think about at the bottom of the triangle here, engagement with indigenous peoples, local communities, and affected stakeholders, because another aspect of nature considerations is also thinking about impact on stakeholders and communities. So the human aspect would be key as well. And I would just say that globally, from a legal point of view, earlier this year, there's an advisory opinion on legal duty of states to address and protect human rights from impacts of climate change that also extends to responsibility around nature-related risks by extrapolation. And I will also mention that in the recent update, which is an ASEAN Declaration on the Right to Safe, Clean, Healthy and Sustainable Environment, to just illustrate the broader policy context in the region on the importance of having sustainable environment. In this context, I'll just highlight that the ASEAN taxonomy, which has finally completed its taxonomy development over the years, published in October, has biodiversity as one of the 4 environmental objectives, included under the environmental objective 3 of protection of healthy ecosystem and biodiversity. And so with this, there are actually very detailed taxonomy guidelines and principles on biodiversity as an assessment of these environmental objectives. So I certainly invite the audience to consider taxonomy relevance to your frameworks, and could refer to the ASEAN Biodiversity Assessment as guidance on the key questions to ask. How would your activity be protecting, conserving, or restoring ecosystems and biodiversity? And this also includes how do you enable stakeholders and others in your value chain to do the same? And so there are some key questions here in terms of protecting and restoring ecosystem and biodiversity. And there are also detailed guiding questions on do no significant harm. So I think that's a very good example that I just wanted to leave the audience with. And as we think about the case studies in the report, you can think about the kind of key points mentioned in terms of how it is integral and integrated in terms of thinking about nature, recent opportunities, including more nature-based solutions and ecosystem services. So I'll stop there. Thank you.
Thank you very much, Vivian, for that very quick and comprehensive overview. I'm sure that if any of the listeners would like to hear or receive more information, we can definitely share details after this call. Agree that in terms of this holistic approach, that is really necessary to combine both climate and nature. Aligning with global standards such as TNFD will be critical in order to unwrap some of this sustainable financing structures and mechanisms. And so for our next presenter, please welcome Gratian De Vos, who's the Associate at the Center of Expertise and Innovation, Green and Sustainable Hub at Natixis Corporate Investment Banking. He is also the HKGFA Net Zero Commitments Workstream Lead and the co-lead producer for this report. And he will give us kind of like a quick overview in terms of the current financing landscape in Asia. So with that, the floor is yours, Gratian. Thank you.
Thank you very much, Jenny. I'm very glad to have participated to the report itself and to be given the space to talk today. So I would like first to start by the very beginning, the title of this report, which is Mobilizing Sustainable Finance to Halt and Reverse Nature Loss. And as you can see, that title is inspired from COP15 goals to halt and reverse nature loss by 2030. And this goal is quite new because finance for nature or biodiversity, uh, like in the past, tend to be focused in protection and restoration. Yet, there is a need to halt nature loss. And that is to say, to halt negative impacts of businesses on nature and human activities. So we need to define a common language to talk about nature finance, and this needs to be considering the halt nature loss part. And actually, a common language was sort of created this year and is gaining momentum. Nature-related finance contributes to the restoration and conservation of biodiversity, of course, but it's also about the transformation of economic activities to reduce one or more of the direct drivers of biodiversity loss. It's also about integrating nature-based solutions within economic sectors and all the policies, initiatives, or tools and activities that support these objectives. And this actually new way to look at nature-related finance should help into accounting for nature finance. Because as of now, it has been quite hard by the OECD or other organizations to account the flows towards nature-related finance. And actually, if I take a very clear example of how...
Sorry to
Yes.
interrupt. Do you mind just moving the slides or putting it on full screen just for the audience? Thank
You
you.
can't see it on full screen.
Yeah.
Sorry for that.
Oh, yeah. Thank you. Yeah.
All right. Let's check. So just while I'm still getting back to the presentation, a very clear example of how nature finance is important for actually private companies is how in the agro industry there was a clear move towards regenerative agriculture and supporting the agricultural world and the industry into transitioning towards regenerative agriculture is considered as nature finance for financial institutions having clients such as Unilever, ATM, Syngenta, Cargill, and supporting their transitions are contributing to nature finance. These actors pledged to transform and transition towards regenerative agriculture practices over more than 16 million hectares. So that's around 140 times the size of Hong Kong, which is quite enormous. And this is a private initiative that's supporting the goal to halt and reverse nature loss. And I told you that nature finance was really hard to measure, and that is because of the nature of finance itself with very different products, initiatives, whether it's public, private, or which is compliant with many different standards. And some products, such as the ones from the ICMA's principles, such as sustainability-linked bonds or loans, or use of proceeds bonds or loans, green, sustainable social bonds, do contribute to nature finance, yet they are not accounted as such yet. For example, sustainability-linked bonds do integrate KPIs and targets which tie the issuer with that target, and margins are adjusted when the issuer meets or not that target. And about 9.5% of the KPI used within these transactions are nature related. That is to say that they do target a pressure reduction on biodiversity, such as air pollution, waste reduction, water use, sustainably sourced commodities, or material efficiency. So that's for one tool incorporating nature-related KPIs. And what we have seen in the past as a very important tool for nature is a debt for nature swap, which swap very expensive commercial debt with guaranteed debt and sort of freeze capital towards nature conservation objectives, such as the one that happened in 2024 between the US and Indonesia, that freed about $35 million of debt towards coral reef conservation. And in 2023, according to the UNEP, global private nature-based solutions financing reached about 23 billion US dollars, either through use of proceeds, philanthropy, private finance by development institutions, through biodiversity and carbon offsets, or supply chains financing. And as you can see, there are multiple ways to consider a financing as a nature finance, multiple type of financing, and that is very hard to account globally. What we can say is that on the use of proceeds front, so the green bond front, we have seen an increase in expenditures related to nature, and particularly in Asia. So we have seen that the market in 2023 sort of boomed in terms of allocation towards nature-related expenditures, and particularly from China, Hong Kong, South Korea, and Japan. And that tendency will continue. What you can see on the graph here is that it sort of reduces in 24 and 25. That's only because the allocation reports are not out yet, but we can expect the proceeds to keep going towards nature-related financial expenditures. My last word will be about how financial institutions can integrate nature into their strategies, credit processes, and investment decision-making. And actually, it's also beyond an opportunity. Nature-related finance is also a risk issue. And considering that ecosystems do provide services to companies, which in their turn put pressure on ecosystems, degrading them, well, we are for sure exposed as financial institutions to ecosystem services disruptions that may impact the credit of companies depending on these ecosystem services. And therefore, it becomes a key element for credit from a credit perspective. And these parameters should be stressed as climate is being stressed by financial institutions right now. And so in order for financial institutions to better understand their risks and opportunities related to nature, the reports provide a few guiding steps in order to better integrate nature in their processes. So first, to align with global standards and frameworks, to integrate biodiversity into financial decision-making and through risk management, and then engage clients on risk mitigation and opportunities, and and also focus on building nature investment products, not thinking only about the risks, but also about opportunities, because it can be also profitable to address nature as a financial institutions. So I will stop here and give it back to Jane. Thank you very much.
Great, thank you so much, Gratien. It's quite optimistic to hear that while nature finance in Asia is still at a nascent stage, we are seeing existing products that are incorporating some of these KPIs into their sustainability-linked loans, debt for nature swaps, and private financing. And we'll hear more of how this works in practice in the panel discussion. So with that, it really brings us to the next and final presentation, which basically will showcase some of the solutions on how can project sponsors and issuers generate robust decision, useful data, and credible nature-positive roadmaps. So please welcome Stephen Sun. He's a director and nature-based solutions lead, sustainability task force at AECOM. So Stephen, the floor is yours. Thank you.
Hey, good afternoon. Hope you can hear me. world. Let me just share my presentation first, and then I can hopefully we can start. Yes. Well, good afternoon. We're delighted to share the Natural Capital Index this afternoon. It's a tool that we've been developing for the past few years. And recently we've rolled out the first pilot project, and we are having more and more pilot projects underway in Asia. So we're all here together, working towards integrating nature into a green finance system. We'd like to propose kind of 3 essential steps to allow us to unlock more green finance opportunities. Now, first of all, we need to be able to identify what's good nature. Here we call kind of like high performance ecosystem. But more importantly, how do we quantify them? This is where the Natural Capital Index actually comes in. And next, we do need to be able to store and display these data in a very effective way to our stakeholders. I think we all now understand that not every nature is good nature, but luckily with science and a performance-driven approach, we can deliver and support more and more good nature to happen. And we would like to call them high-performance ecosystems. And there's also another kind of like key essential attribute to it is about accountability. So therefore, by adopting kind of smart monitoring systems, as well as the blockchain technology, we can create kind of credible data coming out from nature. Now, we all understand that it takes time. I mean, nature takes time. It won't kind of like comes and happens tomorrow. It takes decades for good nature to establish. But luckily, with a performance system or quantifying system set up, we can actually use baseline understanding and project into the future of a potential how our nature can become in this particular way, obviously under the analysis and a strategy derived by a practitioner in the environmental sector. Now, the key is how do we kind of like quantify and define the performance of nature? The Natural Capital Index is a simple way. It's a very simple way to quantify the performance of nature. Now, each of the KPI that we see within the index, it will be presented as a single numerical value. I think that's very important for our financial sector. Now, by capturing a total of 5 key ecosystem surveys, we believe that we're able to create kind of like a balanced approach, which is simple enough without compromising its credibility. Now, carbon will always remain in the system because it's very established that we are familiar with. But the real star here in the index is biodiversity. I mean, biodiversity is really gaining momentum. It is also the best indicator on looking at and identifying the healthiness of our ecosystem. And finally, we add in air, water, and soil, which are the essential ecosystem that our nature will provide to us to complete this set of the Natural Capital Index. I'll demonstrate more on how this index would work in our pilot projects in my later slides. Biodiversity, all scientists would tell you, is a very, very complex subject. It can come in thousands of data, but it doesn't help that if we're dealing with this complex subject without a very structured way to look at it. And therefore, the biodiversity accounting metric really comes in play. Now, the biodiversity accounting metric actually was developed in the UK. It has about 30 years of history. And right now, the UK government has already deployed this particular method on quantifying biodiversity as a statutory requirement for land development. Now, in order to use it in Asia and Hong Kong, we do need to bring this particular framework and start to contextualize and domesticate for this purpose. So our team has already worked on this particular method, applying it into Singapore and also into Hong Kong, which is about to roll out. Now, the metric is worked out in this way. It's using habitat as the indicator. So by understanding the distinctiveness of a habitat, which will represent by an average value of a particular habitat type, times the condition also relate relative value of a particular habitat type and times the area, and then we'll be able to work out the sum of the total of the biodiversity unit on a particular place. And we do need our ecologists to actually go out on site and collect these particular data and actually work with these particular data. And how would that financial roadmap be? Our last speaker also explained about how the financial mechanism. So I'll just quickly use a different diagram to visualize this. We believe these indicators will entice corporates, more and more corporates, to jointly to support into more and more restoration, conservation, and nature-based solution projects. In return, in exchange for these good nature data, which can then plug into the ESG report and into other relevant green finance KPI required by their banks. And hopefully, we can actually integrate nature data into the sustainability-linked finance, and even the potential to develop or enable a new kind of a nature-linked finance into the entire system. I'd like to take the next part just to introduce our current pilot project, which we have released the data earlier this year in Bintan Island. Bintan Island in Indonesia is 40 minutes ferry away from Singapore. Our pilot site is at the east coast of the island. It's 100 hectares of degraded forest. For the past kind of 100 of years, this particular piece of land has been damaged and degraded by local villagers and local people by extracting minerals and other resources from nature. So originally, it would have been a mature primary or secondary forest, which is the more preferred habitat type for this area, has been degraded into a mosaic of shrublands and grassland, and even into patches of bare soil. Now, the projection that we're looking at, first, we need to have a strategy. The strategy is to accelerate the natural succession process by using human intervention, really to bring this mosaic of patchy habitats back into mainly as a secondary or forest, or even going into mature secondary or primary forest. Now, here are some of the data we have recently released in May. You can see a very kind of complex array of knowledge, as well as potential capture into the natural capital index, into the 5 key KPIs, breaking down into biodiversity, air, water, soil, and carbon data. We first understand the baseline is what is existing, so you can see it in the picture, and each with a numerical value, and potentially by adopting the strategy, the recovery strategy through natural succession, we can potentially be bringing these each of these KPI up. For example, that biodiversity in 30 years' time with a potential 100%, more than 100% increase. On the carbon side, in 30 years' time, by the right strategy, we can add an additional 7,000 tons of carbon sequestration. But with the data, it would be more effective if we're able to capture it in the interactive dashboard. We can show spatial data as well as numerical data. I believe I do have a couple of minutes, so at this point, probably might be useful that if I can share with you on how the dashboard actually works. So hopefully you can see it here. I think everyone can access it online. It's dashboard.napital.org, napital.org. So that's where we place the particular, this Bintan pilot dashboard. So you can see the base of here is the spatial geographical data that we can look at the different contexts, as well as the surrounding context of our site. We can look at the current kind of habitat distribution over here, and the top box over here offer more data of in terms of the habitat as well as the species. Unfortunately, we're not going to share the location of the species in order to protect them. But about biodiversity and other data can then be visualized in terms of the space, as well as the simple numerical value on the baseline, as well as the projection. And we could also move on to other data such as carbon and the relative projection that the ecological restoration strategy may offer. Air, water, and soil very similar. So doing good shouldn't be an aftermath. I believe it's time for us to unite our different sectors and also unite our resources through green finance. Thank you very much.
Thank you, Stephen. That was excellent, especially showcasing the tool in practice and in action. I'm sure there's going to be a lot more questions or people wanting to learn more about the metric and your study. So if anyone does have any questions, please feel free to reach out to the Secretariat after this session. Now comes the meat, which is a panel discussion where we'll showcase how some of these concepts, standards and frameworks are really translated into real-world actions. So with that, please welcome our moderator, Stanley Chu, Director of Research and Investments at Seneca Impact Advisors, and also our leading industry experts, which collectively have decades of experience, Ben Ridley, founder of 4C Advisors, Crystal Gang of BNP Paribas, Asia ESG Research Lead, and Tom Holland, founder of DFA. So to keep this session interactive, please do post your questions in the Q&A box at any time, and then we'll incorporate those either into the session or at the end of the discussion. So Stanley, the floor is yours.
Thank you, Jenny. We're incredibly honored to have Ben, Crystal, and Tom with us here today to provide additional context, additional perspectives on some of the issues that we've discussed. In particular, I think Stephen's presentation just now is the perfect segue into one of the topics that I wanted to explore with the panel today. And that is, how can we use more robust measurement tools to enable new financing pathways for nature-positive investments, including some of the structures that Gretchen talked about in his presentation. So Ben, let's start with you, if I may. And we talk about this every time we meet, right? Natural ecosystems deliver a much wider range of benefits beyond carbon storage, such as biodiversity, water regulation, soil resilience, coastal protection, livelihoods, and so on and so forth. But there are essentially two problems that we face. Number one is quantification. How do we quantify the outcomes? A lot of times we are just focusing on the outputs. We would like to allocate $100 million for a particular conservation park, but what are the actual outcomes, right, in terms of the different metrics that I talked about? And the second challenge is really, it's one thing for a particular benefit to be quantifiable, but how do you monetize that benefit? But for now, let's focus on the first issue, and that is the quantification issue that Stephen was talking about. So Ben, let me ask you, to what extent are we as a society currently quantifying these services in our daily decision making as of now? In other words, where do you think we are in terms of on the technology adoption curve, if you will? And how can enhancements in these types of tools potentially create new pathways for financing these types of nature projects?
Sorry, Stanley, the question's around the tools and the technology, or a little bit broader?
Yeah. So well, first of all, I guess it would be helpful to put this into context, right? What's your estimate of the value of ecosystem services as of today, and on a day-to-day basis, which types of benefits are we currently quantifying the most?
Right.
Carbon, of course, but in addition to that, are we making use of the types of tools that Stephen was talking about to quantify more of the potential benefits that we can capture from these ecosystems?
Yeah. Okay. No, thanks for the question. I'll try and have a stab at that and invite my fellow panelists as well to sort of contribute to this. The way that I look at this and the way that I would benchmark it is how much is global GDP? It's about $100 trillion. I think just about half of it is goods, and every good starts with basically a commodity. It starts with a mine or a plantation, or something we get from the ground or we grow out of the earth. So in terms of the sort of provisioning services that nature provides in terms of food, in terms of water, in terms of goods, you've got at least the same value of half of the global economy. So in terms of valuations of provisioning services that nature provides for us, you're probably talking 50 plus trillion on an annual basis if you just sort of go back and, well, where does all this stuff that we consume come from? I think there are some more sort of nuanced challenges with putting a value on nature. If you think about the cultural or the recreational or the aesthetics, I'm currently in Japan, and it's not quite outer space, but it's a bit dark and cold outside, and I come here for recreation. There's a huge sort of value on that, and so straight away we do get into sort of valuation challenges. So we can account and we can put a value on some parts of nature by sort of back testing. In terms of other services that nature provides, what's the value of soil? The soil cycle, nutrient cycles. What's the value of clean air and oxygen, which comes from photosynthesis? I mean, the number is extraordinarily large, and it's pretty clear that, given some of the numbers that Gratien was referring to, for example, in his presentation, we're talking about nature-focused finance, debt for nature swaps or sustainable finance or whatever it is, and we're talking about billions when we probably should be in the trillions, but we're nowhere near there. So I think we're making progress, but we've still got a pretty substantial disconnect in terms of how we value. In terms of understanding what nature is worth, I think we've made huge progress on this. I mean, going back over 20 years to TEEB, the economics of ecosystems and biodiversity, when economists started looking at how do you go about valuations, we started to come up with big numbers, but every year we do these exercises, the number gets bigger and bigger and bigger. And of course, for carbon, we can come up with numbers. For biodiversity, it's a lot more subtle. And then the benefits that biodiversity provides and those interlinkages with communities living off the land, which is still a phenomenally large part of the global population and an awful lot of people in this part of the world in Asia. So what nature does for us is enormous, and the valuations around it are enormous. So how do we bridge that gap between the hundreds of millions or the billions that we are redirecting towards nature and livelihoods, and relative to all of these great benefits that we get for free?
Thank you, Ben. So that is the quantification side of the equation. Another challenge is obviously monetization, right? Once we've identified the types of benefits that ecosystems are providing, once we've attached a dollar figure to those types of benefits, how do we actually make the projects bankable? And I think perhaps we can turn to Tom from your experience with projects on the ground. What enabling conditions are required to mobilize capital beyond carbon markets? How do we mainstream biodiversity financing, in your opinion?
Yeah, I mean, that's a real difficult one. So of course, our context is we are doing reforestation in the global south, in Cambodia and Myanmar specifically. Really, there's the main two ways to monetize nature in such programs is either you're improving productivity and you're getting some finance from a crop, or let's say it's timber in this case, in a reforestation, or it's carbon. We really do not see a market for biodiversity as of yet that we could underwrite any project on at the moment. That's just the way it is from our perspective. In terms of how would we get there, I mean, I think we're the main driver of funding in the market that we deal in it's really coming from carbon. We actually would prefer if it came from people who'd be willing to pay a slight premium for sustainable timber, but we don't see that demand. And because of that, that sort of aspect or way to monetize a project would have to compete in the market with large industrial monoculture farms, which you can't if you're trying to do a community reforestation polyculture, out in a rural Asia. So then we end up in a carbon box, and actually the carbon funders then dictate a lot about the project design, because that's our main source of monetization. And actually, that works against biodiversity. We're having a situation right now where that's the case, because if we can stage a planting with pioneer species, and after 4 years replace them with a natural forest, once the soil is restored, we can do a much more diverse set of species. But once we remove those trees, it triggers that an additionality question, because then suddenly we haven't it hasn't been degraded for 10 years because we just took something out of the ground, even though that the nutrients in the soil wouldn't be there without action. So as a result, we need to actually pare down the number of species in order for the success to be a success. So, there's a lot that has to happen to get to biodiversity. I mean, it's part of it is data, much better data. Part of it is policy. Part of it is there has to be substantial capital to fund the ways to measure that and monetize it, which just doesn't exist today from our perspective.
Thank you, Tom. So bankability is an issue. Another issue is scalability, right? So in order to mobilize the kind of capital that we need in order for us to achieve the targets that we would like to see, we would really need the involvement of capital markets. And perhaps Crystal, can you talk about how we can take a longer term, more programmatic approach to come up with institutional solutions that can crowd in more private sector capital, not only at the individual project scale, but on a more permanent, on a more portfolio scale basis?
Thanks, Danny. I think when we are for biodiversity or nature is still like as Ben and also Tom mentioned, it's hard to quantify, it's hard to bankable, and also even harder to be scalable. But I think we do have some existing kind of a scalable method or product we can draw the experience, which is still related to climate change. But anyway, climate change and biodiversity, they are so linked together. They have the synergy. We shouldn't separate them. So if we are talking about the kind of what is the way from the financial industry so that we can leverage to make all the investment to be more scalable, I think blended finance, that is a kind of the only way to scaling nature positive investment across all the market. And then to solve the biodiversity challenge in this really very commercial driven world. I think most of the audience or us know how does it work, but in case someone doesn't, basically a bridge the gap, which is you can name it trillions or whatever, the financing gap by layering concessional capital from DFIs or philanthropists so that they can de-risk a project. Then the private capital, which is a commercial investor, can chime in. More private capital can crowd into this investment. I can give you a real world example we have just finished so that people can feel that it's not something only in a kind of blue map. It is some actually project which has happened already. So in February this year, so we do have established a counter guarantee agreement with European Investment Bank, which is EIB. So basically, EIB put 500 million euro as the backstop so that it can enable BNP to establish a 1 billion guarantee portfolio. And then this portfolio can provide guarantees so that eventually it can unlock up to 8 billion. This kind of amount of money so that we can invest in, but this one is typically focused on wind energy investment, but it can be in a similar logic to the other kind of renewable energy or nature-based solution. So that is how the thing is working. But that is still a lot of market-wide constraints, although that is something beautiful, but in practical, this very complicated structure often increase the transaction cost. I will say at least 10% up to 20%. and also the deployment process can be like a little bit slower than the Euro projects. And there are also the other challenges such as the mismatch between the global standard and the local expertise. Also, to be honest, practically, so we are in a kind of international tensions, which is the collaboration is quite limited, and also with increasingly polarized world. I think this kind of progress is a little bit slowing down, but doesn't mean this approach is not going to grow. And I think that is to respond. That is the only way we can leverage to make biodiversity related financing or investment to be more scalable and to be so the case from BNP Paribas, we have seen like EIB provide 500 million, but eventually it can go to 8 trillion. But usually this kind of structure can multiply the commercial capital 4 to 5 times, which is amazing.
So it seems to me, Crystal, MRV could also be a barrier to growth, right, at the institutional level, and technology may potentially be an enabler going forward.
Yes, I think the technology is exciting. When we are talking about technology, everyone love it. Because that is very related to money, right? I think Tom mentioned like carbon credit is the top one related to money, but of course, I think technology is more like a practical if we are talking about like the potential with our investors. Well, from our perspective, I think the technology. Because there are just so many technologies to tackle so many environmental kind of challenges, but we do think like the technology which can really tackle the problem from adaptation is essential and very crucial right now. Because just the COP30 mentioned how adaptation is pressing for the whole world to address, and also especially in Asia actually, because we have seen like in Asia, there's just so many catastrophes. Right now, in Indonesia, I think almost 2,000 people died from the flooding. And I don't know whether you read the latest that Bill Gates, his new climate kind of position. 5 years ago, I think he just his position like mitigation is the fundamental thing if we want to tackle the climate change crisis. But now this kind of position is shifting from mitigation to adaptation, because adaptation eventually we want the world to be a more equitable world, and also because of all the catastrophe, we need to really further consider the social equality which is worsened by this catastrophe, as I mentioned, especially Southeast Asia. So from an AM perspective, there are quite a lot of scalable technology right now for adaptation to enable us, for example, to structure thematic investment so that we can capture opportunity. And also on the other hand, there are also some other cases like we can use it to better manage our investment risk, so that such as to optimizing allocation. If we are trying to plot this kind of technology into a matrix, so the matrix consisting of a maturity of the technology versus the potential impact of the technology. So I will see like the remote sensing plus the AI driven modeling could be the most mature one, and also with the biggest potential impact. This scalable technology basically is using satellites to predict ecosystem changes, such as the flooding risk in some watersheds, and also in some of the other biodiversity risk sensitive areas. So all these things, it can allow us as a manager to have a better understanding, and then to proactively shift the portfolio to some resilient nature assets, such as the coastal buffers or restored forest. This is actually supporting right now some large-scale fund strategies, such as the emerging blue economy funds and some forest, which is timberland-related private asset funds. If we are talking about what is the skill, what is the prediction, I think we can quote one from McKinsey. It just released. I think the market will be 1 trillion. And to be honest, it is not very widely being used. But we have the confidence for the next 3 to 5 years. They are certain to be scaled, driven by the falling costs and also the collaboration makes them more scalable, and also because of the passion from the investors. Who is looking for all the different kind of application from either AI or the other kind of technology.
Yeah, thanks, Crystal. I think you touched on a very interesting point that we've also noticed in the last couple of years is the gradual transition at the institutional investment level from climate mitigation as a thematic to climate adaptation. And Tom, to your point about certain benefits being harder to monetize, have you seen any financing structure on the sort of adaptation side of things? For example, microfinance that incentivizes smallholder farmers to restore land, right, in order to reduce the risk of flooding. And this example, I think, it's also relevant to the northern metropolis in Hong Kong, for example, with the fish ponds. Have you seen anything like that in practice in the markets that you operate in?
No, but we have worked with community forest microfinance programs. I guess it's similar in the sense that part of the interest earnings is meant to go to forest management activities, typically patrols. But I just go back and comment on this notion of technology. I think the issue with technology when we're talking about this is, as Crystal said, all investors are fascinated by technology. It's a techno environment we live in. It's the AI bubble. But you just cannot separate people from landscapes. And I find that techno solutions oftentimes are not considering the communities. You can have the best data in the world. If you don't align the interests with those communities, they're going to strip down the forest to live, especially in the global south, right? They need to live, they need to survive, they need livelihoods. If a Silicon Valley firm comes in and takes all the money, takes all the data, they're just going to chop down the trees and plant crops. That's just what's going to happen. So I would like to see a lot more systems thinking when it comes to implementing technology. I may also be biased because the places where we work in, no drones are allowed in Cambodia or Myanmar. So we're not allowed to use drone technology. And there's really no internet in the rural areas of Myanmar right now, and Starlink is prohibited. So there is a limit. And also with geopolitical tensions, you also need contingencies if these technologies are turned off at some point in time. But to your point about microfinance, I think it highlights where I think technology should be going, which is really to take a supply chain view of agroforestry, and that is to really use the data across the supply chain to improve the productivity, whether that's carbon or crop and sustainability, all of those things. And that would be monetized by microfinance, like you said, or input finance, enhanced crops, better sustainability, carbon, ideally biodiversity. In a way, a digitalized ag trader, that's how all landscape tech solutions seem to go to. Unless you're just focusing on little points of the supply chain. That's just my observation.
Thank you, Tom. So Ben, let's go back to you before we go to Q&A. So what we've heard from Tom and Crystal is that technology is a key enabling condition, but it may not be a necessary condition. We still need things to happen on the ground, preferably with broad stakeholder engagement, including the local communities. And I think the same can be said about financial engineering in general, right? There's only so much we can do with financing solutions, but without the conservation work being done on the ground, it's hard to achieve the targets that we want to hit. So Ben, any final thoughts on those two issues, the evolution of technology and financing structures on the market, and from your experience working with corporates, and any final thoughts on those two topics?
Look, I just say as a consultant, I've sort of had the opportunity. I will say it's the privilege to have kind of grown up and developed professionally with technology. My first work was out in the field collecting data. Oh, can you still see me? Hear me? I'm just seeing you, Tom. um, yeah, I mean, getting good quality data. We've got all sorts of technologies that help us to do this in ways that are bigger and better than before. We've gone from aerial imagery to satellites. We've gone from satellites to drones, not where Tom works, but to lidar and all sorts of things, right? So the technology has been a phenomenal enabler. It's allowed us to get more data more quickly. The sort of monitoring, reporting, verification side of things, I think has got probably better because of technology. But you still need people who can go on the ground, particularly around biodiversity. You need ecologists who can get in the field to help you with the ground truthing. You need to have those conversations with community stakeholders for anything to work. So I think the technology has been it's always been very helpful. Now it's sort of there. Now we could get into debates. Is the tech sort of displacing consultants, etc.? Different aspects of technology, but yeah, it's there. I mean, in terms of the financial engineering, I'm not going to stray into that sort of space. There's all sorts of opinions and controversies, etc., around that side of thing. But the tech is very, very important. I would just sort of finish with, if you think about a couple of the key threats to nature from land use conversion and from pollution. The tech has been really valuable in terms of helping to define, identify these problems. If it's continuous monitoring for pollution from chimney stacks, if it's satellite feeds linking to pretty much live land use conversion at scale, technology is great, and of course the technology itself provides all sorts of fantastic investment opportunities as well, right? So if you're a venture capital firm investing in tech out of Hong Kong into this region, yeah, of course AI is a great thing, but I think you can look for things that have an interface in a beneficial way with nature. We talk alternative proteins, a lot of biotechnology, etc. There's just a huge number of things that can have a nexus and a positive impact on sort of protecting nature and doing a little bit of a better job there. So I'll stop there, Stan.
Okay, thank you, Ben. So I think we have about 5 minutes for Q&A. One question I see in the queue, and that's for Crystal, I think. Any thoughts on investors' perception of nature-related financing structures, in particular bonds, for example, subscription rates, any premiums, types of investors who would be interested in this? Crystal, any thoughts on your end? I see you're also typing into the box.
Yeah, I think we still have time, so I just stopped typing because I'm working on my iPad. It's not very. Well, to be honest, there is no yield premium from this kind of bonds. Nature-related or climate change-related green bond, there is no like a very significant premium. But from the issuer perspective, they have a discount, which means that they pay less if they are issuing the sustainable themed bond. And then the second point is what kind of investors is looking for this. The majority, I will say like 75 or 80% will be institutional investors like us. So the large asset managers and also the funds, they have the same like mandates on nature positive, so that they are looking for allocations to this kind of investment opportunities. Other than that, of course, the pension fund, foundations, or some family offices, they are also looking for this, which is similar to the investors' composition who is looking for ESG assets in general.
Crystal, that's really interesting. In terms of the asset owners who would be interested in these types of products, beyond sustainability target considerations, do you think the fact that insurance companies and pension plans have longer term liabilities, and nature projects tend to have very long durations. Do you think that factors into their decision at all?
I do think so. Because even for us, we have the ESG mandate, but we are also a commercial institution. We can't sacrifice returns just merely for the environmental purposes. I think asset owners, like for example, you mentioned the insurance company and also the pensions, they have a longer horizon of their capital. They will look for opportunities who can give them like a long-term return. I just give you an example, like to also take the example of one of our products, which is a timberland. Sustainable timberland, sustainable forest fund, which is investing in sustainable timberland. This fund, if you are just holding it within like only 5 years, you can't really get satisfied or like kind of return you are looking for. We do suggest that if the investor is going to like purchase this fund, the holding period has to be like 6 to 9 years. But that is a very kind of good asset, which is has a low correlation to all these mainstream major asset classes, and also it's kind of they have the hedging effect to the inflation rate. So basically, if the institutional investor, they are looking for some benefits other than environmental, nature-based solution can still be attractive, but you have to hold it longer.
All right, thank you, Crystal. And with that, I think we are running out of time. There are still a couple questions in the queue. Perhaps we can address those after the call. Jenny, so I'll pass the floor back to you.
Actually, thank you, Stanley. I think we just have time for one more question because it's 5:09.
One more.
Yes, if you don't mind, the question that's asked about the terrestrial, I just want to throw it out there to see if any of the speakers would like to address that.
Hi, Jenny. I think I saw that question. I just disappeared off my screen. Was that the one saying if terrestrial is difficult, then how about marine?
Correct. Yeah.
Yeah, I just typed into the response. Actually, I mean, some years ago there was the Seychelles blue bond, obviously focusing on marine conservation, more sort of sustainably managed fisheries, etc. And I think that was sort of well received in the sort of sovereign debt space. More recently, the Belize blue bond, similar sort of structure. But how do you safeguard fisheries and how do you stop fishing communities, to Tom's point earlier on, in terms of subsisting from sort of overfishing, depleting, etc. And obviously you've got a lot of sort of reef and mangrove restoration initiatives in that, and financing that has been ring fenced for that. So I think there's some pretty successful sovereign solutions in terms of sovereign debt financing around marine. I can think of a bunch of more local ones in Hong Kong and in Asia, but I don't think we're going to have time. But there are sort of privately financed sort of aspects in this regard as well. I was involved with a mangrove restoration project in Hong Kong over 30 years ago. So there's a lot of examples that are out there. Happy to follow up with more.
No, that's great. No, thank you. And I think, I'm sure there will be more questions than answers at this point in time. But, we're kind of like trying to break down, a very complex topic that's evolving very quickly and looking at some of these challenges around monetization. So, as we come to the end of this webinar, I'd really like to thank all our speakers, our members, and also our partners who have contributed not only to the report, but to market developments. There are more guidance and support that will be available. TNFD has released additional publications on nature and transition plans, nature-related opportunities, and updated mapping of the CDP 2025 questionnaire to the TNFD disclosure recommendations and disclosure metrics. And so with that, I'd like to bring this webinar to a close. Please do stay tuned for upcoming events. Nature and biodiversity will continue to be unpacked at HKGFA and with our members in 2026. And so we look forward to working with you and our members in this journey in Hong Kong and across the region. And then for those who need CPT, please do complete the event survey after exiting this webinar. Do download and read the report. Many of the comments have been made and highlighted here, and to use it as a roadmap. And then don't forget to follow us on LinkedIn, on the website, and on YouTube. So thank you very much to everybody. Bye-bye.